Okay, we are live. This is Deal Flow Live, and I'm Brody Vinson.
I'm Ryan Sandra.
And this is a show where we analyze business listings. We look at businesses that are actively listed for sale online so that we could break them down and talk about our opinions on them, whether we think they are a good deal, what kinds of things you should be thinking about if you were thinking about buying one of them, or what kinds of things you should be thinking about if you were selling something like this. And we do this so that you can learn if you're trying to buy a business or learn if you're trying to sell a business. And you can learn right along with us as we're continuing to develop ourselves around this and look at different deal structures, talk through deal structures, talk about, what types of things you would want to consider in these kinds of transactions, how they work, and that kind of thing. Ryan, what do we have today? What are we working on today?
So
And thank you
today
for
we've
handing
got
me
a
my
nice
mic,
little.
just in case anyone didn't hear any of that. I did not have my mic in front of me, and Ryan just helped me out there.
There we go. So today we're looking at the trifecta of home services. We're looking at HVAC, plumbing, and electrical, and we're looking at ones that fit within a very tight parameter box that we have pre-negotiated with ourselves. And you'll notice that some of these offer a multitude, some of these are singular, but the important thing is that these are all businesses that are cash flowing within a certain multiple and have that home services emphasis, meaning that they do home services, but they could also be pivoted to construction. So that's really where we find that those jobs tend to stick around, and there's not a lot of ways to replace them.
Yeah, and to add to what Ryan's saying, we're looking at this industry because really especially in the Central Florida area and in many areas, there's many areas that are growing so fast that they really can't keep up with, like, the demand of services like this can't really be kept up with by the current amount of companies. And so if you bring a company like this into your fold and start to grow it through better marketing, sales, just recruiting more teams and things like that, you start to actually tap into some of that existing demand that a lot of them aren't tapping into right now because they just don't know how. And so some that we've talked to just don't do any marketing whatsoever, and they haven't really had to. And so you can grow them very easily by just doing some marketing. So today we're really tapping into that home services side, breaking down some of the ones that we're actually interested in for the private equity fund. So this is going to be an interesting one. This is really close to what we're after, what we're going for, and what we really want to get into. So this first one we're looking at is actually a combination of all three of the things that we're mostly looking after. We're mostly looking at HVAC, electrical, plumbing. Those are kind of the core services that we're looking for, and ones that are very often needed in the area. So, what do you think about this business, Ryan?
I like it. It's got a lot of potential. The multiple first thing out the gate is good. It's around that 3x, I think maybe a little bit under 3x. And it hits those points that we were talked about with the plumbing, HVAC, and electric. And I know we keep saying that over and over again, but it's three things that if you think of, if you couldn't turn on a light switch, how long would it take you to get somebody over there to fix it? If you couldn't flush your toilet, how fast? Like, these are the things that we think about. So this one, having all three services being profitable and being long standing and long running, is very appealing. It's almost like a jump start for us to get into all three without having to go piece by piece.
Yeah, it's been around, to give another point to it. It's been around for over 40 years. So when Ryan and I look at a business and we're considering whether it would be an attractive investment opportunity, one of the tests is the 5-year test. Has it been around for 5 years or more, 10 years or more? Usually the longer that a business has been around already, the longer it's stood the test of time and continued to thrive despite changes in the market. So when we see one that's been around for 40 years, that's a really, really big bonus to what we're looking for, and something that really, really shows us that this business is going to continue to be successful. Another thing to look at is, why is this person selling the business? For this person, it looks like they want to retire, and it looks like they want to help out with transitioning the business. And so that's a very natural reason to sell. when someone's retiring, usually there's an opportunity to bring something new to the business that was not in there before. There might be outdated practices that you can come in and change up. So I think this is really interesting.
Yeah, I think what we've learned so far in our talks with these people is that 9 times out of 10, if it's a retirement, it's been around for 10, like I'd say anything over 25 years, odds are there's a very minimal, if any, online presence. The internal systems are a lot of paper, and you're not going to have the best record keeping systems or bookkeeping half the time. Not to say that they're doing it wrong, but they just do it their way. So when you're taking over these businesses, looking into them, it's always important to dig into those questions about the structure and the operational methods that are internal, and those are a lot of ways that you can drive a lot of value and bring more income into the business. If they don't have any online presence, running ads and doing targeted marketing campaigns online could exponentially increase the amount of business you have if it's been purely word of mouth up until this point.
Yeah. So those are things to look for when you get into conversation. And a lot of times you can't quite see those things on the surface level. So I think one thing that would be interesting for us to talk about is what some of our experience, without getting specific or going into any confidential information, what some of our experience has been with like following up for more information with these. What is it? Let's go through briefly like what it looks like when you see a business that you're interested in on something like this, and then you actually inquire further about information that you want to get.
So you fill out the form and all of its, glory, name, number, email, all that good stuff. Sometimes they'll ask for an amount that you immediately are able to pledge or that you're going to put up. We think that question is really weird because if you're asking for 1.2 million and then I have, let's say, 200K cash, but I'm going to need SBA, I would just put that in the notes. Asking me what are you going to ask me for if I'm putting up X amount of dollars? So if you see that question, normally try to avoid filling it out if you can, because it doesn't really serve much of a purpose. But if not, be honest and write an explanation in the notes. That usually leads to a couple documents being sent over, NDAs and all sorts of other legal documents saying you won't reveal this to the public or anyone else. And then you get your sheet, essentially just a overview of the last 3 years normally of the business, income, accounts, payables, receivables, everything they've done in 3 years essentially gets put in your lap. And that's where you start to try to piece together. There's usually a write-up too, along with it. It'll tell you about usually employee counts, the business history, and all these other little items that'll help you get an idea of how this thing is being run, to what extent it is modernized and working well. When it comes to the SDE or the cash flow, you got to be careful. We have many businesses that we've looked at where we've gotten on the calls, we've gotten them to give us the documents, and the cash flow has been deteriorating for the last 2 years. But all of a sudden, this year is going to be double, and that's based on projections, essentially. So what you see there might be a projection for 2024, but it might not be what they're actually going to hit. If they list 2023's cash flows and that's how they do it, I prefer that. But you have to be very careful and diligent in reviewing all the documents that you get when you do this, because there's a very high likelihood that some of the numbers are being just estimated or projected.
Yeah, I completely agree. I think financial due diligence is something that you really, really have to be confident in when you get into this. One thing that's been enormously helpful as we've gotten into these more is when we do get more information about the business. Like if you have people in your network that you can tap into for questions like, hey, I'm looking at this HVAC business. What do you think should be the margins on something like this? Like people in your network that are already in an industry, like if you can tap into them and say, what do you think that the cost of labor should be for a business this size like this, like in your experience? You can do little due diligence checks and things like that just to see whether things are on track, whether it looks legitimate, like it's pretty in line with anything else. And that's a really good way just to really do some of those double checks. But we've got a couple other businesses to look at here as well.
I really like this one, though. This is probably one of the better ones I've seen in a while.
What would you say is your final opinion of this one? What else that's not or that we haven't talked about in here would you want to hone in on here a little bit? Because there's some things we haven't touched on yet.
I mean, I would want to, employee count. You want to know, okay, what is the makeup of that? Are they all technicians? Is an office person a manager? When it comes down to it, you're looking at what's the FF&E, what's included in that specifically. Is this am I purchasing real estate? We do not like to involve real estate because that just adds a whole nother layer of complication. And quite frankly, we just rather pay rent on a piece of land and get the business because we have more control over that than we would, real estate. So that's all conversational stuff, though. Normally, I found that brokers aren't as, maybe they'll give you like what's the FF&E and the employees, but when it comes to getting into a little bit more of a detail in that section that you're on right now, normally that's where the conversation starts because they should have all that information by the time you start talking with them.
Yeah. Yeah, I think back to the employee count, you made a great point there, which is, if I looked into this business some more, I would really want to understand what the dynamic is across the board. How long have they been there? Also, what are their plans for after a sale? I think that's a huge thing to know. So,
Also, how much are you paying those guys? Because what's your payroll like? That's a huge cost in any business. So you want to know like what's the realistic payroll that I'm looking at?
yeah, and that's something that you would need to put in an information request for something like that, and actually get in and look at their P&Ls and things like that. To piggyback off of what Ryan said with the employees, I think the big thing here is just having a full grasp of what it looks like post acquisition for you. That goes for not just the employees, but everything in the business. Is the owner going to be staying on and helping on? Things like that. Sometimes you can get things like that from the listing here. It says the owner is willing to train for 30 days at no additional cost. But what else are they open to? Would they be willing to stay on for maybe a year or a couple years? Are they willing to roll over some of the equity? Meaning, are they willing to keep a small chunk of the business throughout the sale? These are the kinds of things that you want to know going into this, because that all is going to determine what you can do as a buyer. And these are things to consider if you're selling a business too, is are you flexible on the actual terms of the sale? So all in all, my opinion here on the surface level, at least from what we can see, this looks like a really good business.
This is a great jumping off point for the fund as a whole, if this is the direction that ends up working out, or it could be a good jumping off point for somebody who wants to get into this industry. You've got your bases covered. You've got a solid baseline apparently, and a very reasonable price considering everything that's in there.
Absolutely.
Also, this is the most AI generated picture I've ever seen.
You know what? It makes me feel good about the business. I feel like they did a good job with it. Moving on to the next business, though, we've got a state certified electrical contractor with stability. Let's break into this and see what this means. Right off the bat here, we are looking at a little bit more than a 3x multiple, but not much more. To do some quick math on here. So we've got 1.7 million purchase price, and it looks like it is just over 3. It's a 3.06 multiple, basically a 3 times multiple to acquire this business for $555,000 of cash flow per year. Not bad. Pretty solid deal again. Pretty comparable deal. Right off the bat, you can see there's seller financing available. What do you think?
That's good. I mean, multiples I think are important. I think that saying that stability is something you're selling, you're going to have to be very convincing and give me a lot of good reasoning, because business is never guaranteed. So unless they're the only contractor in the state that does one thing, I don't know if stability is something I could safely sell. But
how many years? How many years has it been since 1982? Though, let's see, 2024. They are giving about 42 reasons for stability, though. It's been around for 42 years.
I can see that, but so's our boy who had the 40 years.
That's true. That's true.
Let's see what they got to say about it, though.
Yeah, and interestingly enough, the one that we looked at before, not too far off. It was just a little bit smaller than the one we looked at before, and also been around for 40 years. Let's see what else is going on in this one. So situated along the central east coast of Florida. Looks like it's over on the Space Coast. Specialty contractor. Electrical work with constructions accounts for 45% of the business, and repair and quality maintenance is 56%. So I like that a lot, actually. Whenever you're dealing with constructions and new constructions, things like that, that tends to be a little bit more predictable, I'd say. It's more like you can understand the scope of like how much to project as far as how much it's going to make. The maintenance is good too. I think if you've got a lot of maintenance agreements and contract, that's really valuable here.
Recurring revenue is a huge theme in these businesses, and the more that you can get, the better you'll be both in business and on the sale of the business. Thankfully, they have percentages listed, which is always nice of the breakdown. Construction, never, it slows, but it never stops. So being specialty, whatever that is, that's a valuable thing. And coming back and being the only person that can repair it, also very good. So they are making a good case for stability.
No individual client makes up more than 15% of the annual income. That's a big one. That's really important. So that's a really good point going for this business. One thing to note here is it says that the buyer must note that an electrical license is mandatory for purchase. So they should have a licensed qualifier. That tells me the owner might not be willing to keep theirs on. A lot of times when someone that needs licensing for a business, a lot of times when they do sell, they are keeping their licensing on for some kind of consulting fee or to maintain some equity or something like that. So this tells me maybe they aren't willing to do that. I would want to understand that. High profit margins. Let's see what else we're working with here. 11 employees, actually pretty similar in size to the last one we looked at. And it says that they have SBA term financing negotiable for qualified buyers. So that's good. It sounds like they might have already had some conversations with SBA lenders or something. So I would want to understand that. I would want to also understand what this looks like. They say managers in place to continue owner-involved operations after a smooth owner transition period. I would want to understand what those managers are doing on a day-to-day basis. Are they basically handling everything?
Yeah, I mean, at the end of the day, it's the same thing as we always say. You want to know the makeup of the business. You want to know the stacks. You want to know the operational guidelines. You want to have that little bit of next layer to know what you're really stepping into, and is it worth that price point?
Mm-hmm. What else would you want to know about this business, Ryan?
I really don't have too many more questions for it. I think that I would be interested to know what their plan is with if they service residential at all with the constructions. Like, clearly it's specialized, but does that mean they service the specialized stuff that they're doing afterwards? Do they get these people on maintenance contracts? What's the outlook like? Is this business relocatable? What's the licensure? Is the owner willing to stay on for the license? Like, it doesn't list it, but I'm gonna ask. And if so, how much do you want to stay on? Because that's an auto DQ right there.
If they're not willing to stay on.
Yeah, because I don't have a license to do electrical stuff, and I don't think I'd be able to get one that easily.
No, I think it'd be pretty hard to get one. Yeah, I think unless you came in and you were already an electrical company adding this on, or you were an electrical contractor that was wanting to buy something but had previously just worked on your own, that's something that could be a really big sticking point here. One thing, back to the seller financing, I do really like that, especially it already being a good multiple. They obviously don't say how much seller financing is available on here, but that does tell me that it's negotiable here. Like, you can figure out a pretty decent way to make this deal work.
There's some potential in that. I hope it's not, what I see a lot on these sites is like 10% or 20%. I'm hoping they're getting close to that 30-40%, because that means that they have a lot of faith in the business. And they also are, very passionate about seeing it succeed. So if you're willing to do that finance, it's more of a goodwill, I think, at that point. And at the same time, wouldn't you rather make 7 to 8 to 10% off of the money that you're technically lending than have somebody go to SBA and get it? I think you'd want that little bit of extra return.
Yeah, I think so too. And ultimately the openness to seller financing, while they don't say exactly what it is, it just means that there's more ways to get this deal done if you're someone who's trying to buy this. So all in all, I would say this one, another good business, good, solid business. Noticing that's a trend here. A lot of the businesses in this home services space is a huge reason why we're looking into these businesses for what we're doing. Is there's just a lot of good, solid businesses out there like this that have been around for a little while, can keep going if they just have competent management in place and ownership in place. And they're not going for exorbitant prices. They're open, flexible, that kind of thing. A lot of times the owner just wants to go retire. It looks like that was the case with this one as well. They're approaching retirement. So very interesting. Would love to know more about that one. Now let's go to this one. We've got a smaller business here. This one's in Palm Beach County, so a different area. But here in Florida with us as well. A lot smaller business, but a great deal. $209,000 in cash flow. Asking price is less than a 2x multiple. What do you think about that?
I think it's probably a fine business, but I think that when you see, if it's too good to be true, it probably is. And there's no such thing as a free lunch. Two very important things to remember in business and in life. And I think that when we read about it, we'll probably find a bit more. Because to me, when I see that very close multiple, my first thing is this owner operator type situation? Is it like, because to me, I don't know how your margin would be on staff if you had multiple plumbers and you're selling it for $370. What's the deal? How many people you got?
5, it looks like. So I'd be very curious to see what the breakdown of those employees is. Clearly, they've got a good bit of margin coming out to get all the way down there. It looks like the EBITDA is 132. So you see a discrepancy between the EBITDA and the cash flow of about 80 grand. That, to me, that just means that the owner is still doing some things. So that's important to know.
Description that he is assisting the main plumber, which means that you probably have to get another plumber to come in.
So I wonder what the deal is there. I guess with assisting with admin tasks and things like that would be my guess.
Yeah, that's where the other people must be. They must be doing office. But I mean, that was kind of my thought when I saw that. I was like, this guy's probably taking home a good chunk just because he's active in it. And he's not fully active, but if you're helping somebody in a trade, you should probably be trained in the trade. So,
yeah. And a lot of times when they're smaller like this, you do see that they're a little bit more owner operated. That's why they can be a little bit more difficult to get into if you don't want to be in the management of the business and you want to be more passive in it, which a lot of people that we talk to that are considering investing into something like this tend to want to be more passive with what they're doing.
Yeah, passive has a price tag though, as we say around here.
That it does. You have to go bigger. Usually your returns are not going to be as good either because you being involved saves margin for the business. However, you're saving your time if you're passive as well. So that's why a lot of people want to be passive. One thing I see in here, obviously they're retiring again is the reason here. So that's been a common trend of ones we've looked at. The owner may allow his license to be utilized by a buyer at agreed upon terms. That's good. I personally would want to know if they are willing to roll over that equity again, if they're willing to hold, say, 10, 20% of the equity and keep it in the business and go that way.
So, I think something to bring up here is that we talk about rolling over equity. Maybe just kind of say why you like to ask people, because I feel like we have a structure that we follow in deals. And at some point, we should probably make a worksheet and So
rather than a worksheet, you could check out a video on my channel. Actually, if you're watching on YouTube right now, it's just on my channel. I actually just put out a video yesterday, I think, or the day before, kind of a full breakdown of the way that we structure deals and what we look for, the 5 biggest things. So check that out if you're tuning in.
Made a video. That's crazy. Go follow him, guys. But yeah, I think when you say equity, why are you so, what's with the equity obsession? Why are we so like pushy about that?
It's insurance on both sides. So on the side of us as a potential buyer of a business like this, keep the previous owner keeping some equity is insurance that, the contacts of the business, the customers, the employees will stay on. A lot of times they've got relational capital with the previous owner. They're partially still there because of the previous owner. And you want to make sure that transition is smooth. Having them keep that equity helps ensure that the transition is smooth because they've still got a reason to stay around. The other thing is that it's partially insurance for them that things are going to go smoothly. If there's any seller financing as part of the deal, they probably want to keep on that equity just to make sure that they can have a hand in making sure you don't screw up the business as the buyer. And if you, depending on what your plans are, us, for example, we're looking to really grow these businesses after we buy them. So when they keep on that equity, that equity is probably going to appreciate very quickly. If they keep on 10% of the ownership of the business and we grow the business a lot, that 10% becomes worth more. So they're able to maximize their sale a little bit more that way as well.
All very good points. I think it's important to remember that if somebody is adamant they don't want to be involved and they want to get out, it's probably about that time that you should walk away. Because I think what we've seen is many business owners are very emotionally attached to the business to a degree. And that's where these high prices come from sometimes. And that's where some of the negotiation gets a little rough because they're not looking at it like a transaction. They're looking at it like it's a very important thing to them and they want to get as much as they can for it. So if somebody seems to be almost all too happy to get rid of their business to you, that's where you really either dig deeper into the books or walk away because odds are there's something in there that they just don't want to deal with anymore.
Agreed. Yeah. And it's just an immediate red flag. I call it sinking ship syndrome. Mm-hmm. If it seems like it's a sinking ship that they want to jump off of, then it's not one you should get on.
Yeah, that's a good point.
So one of my business partners, our mutual associate, likes to call the rolling over of equity schmuck insurance. It's insurance that the business isn't going to be messed up afterwards on both sides. So I think it's a really constructive way to just keep everyone's incentives aligned.
It's a good way to kind of figure out where somebody's at and kind of how you can meet them halfway.
Exactly. So what is your final take on this business as its own standing thing? What else is there to talk about on this one?
There's not much to talk about because they didn't give us much to go off of. I mean, they gave us the pertinent information. This is a business for somebody who is in the plumbing industry or has an existing plumbing business to tack onto it or kind of what we say bolt on. There's really not much to it, and that's good if you're trying to expand your acquisition or get a jump start on a new venture that you're involved in. But I would say from the perspective of us, I'm going to give it a C+. The bones look to be good. It seems to have everything it needs. However, the owner-operator involvement and trade specificity is what takes it from a B- to a C+.
Fair enough. I would say I'm personally going to give it a B- because there's a couple of really good things going for it. First off, it's 20 years old. I think the chances are that the contacts that the business has, and I would want to know if they've kept any decent records of things, but I would think that the contacts that the business has are probably just not being utilized that well. And, there's probably a way you could stay in front of them a lot better and get more business. I also, if they're about to retire, I also doubt that they're doing any digital marketing. You could probably easily ramp up the business that way. The other thing, the big one though, I'm going to say is the cash flow to asking price ratio it's really good. It makes it really easy to make your money back with the business like this. But to your point, I think this is one that you have to be prepared to take a really strong role in. You have to be willing to put in some sweat equity on this one. So for our specific purposes, I think it's not a great pick, but I think it's a good deal in general.
There's a couple different situations and individuals where this would be a great deal for, or just maybe down the road if this thing's around, it's a bolt on for us. But I think for starting, it might not be what we want.
Here's something that's interesting. Oh no, this is an extra price to add on. I was interested to see what that valuation report was, but
yeah,
it's a little freemium option.
mm-hmm.
Interesting. Well, I mean, given everything that we've talked about today, I think the important thing to look at is, are you looking to operate the business yourself, or are you looking to manage it at a high level? And that's really going to be the thing that determines what size business you look at. We looked at a couple of larger ones and one small one. And I think that's the big differentiator there. It really depends on what your situation is coming into this. But all in all, you can see that across the 3 home services we looked at, the 3 home services companies we looked at, they're all doing pretty well, and they've been around for a long time. And we see that left and right. There's a lot of that happening. And I think this is a really great category of business to get into.
For sure. I think there's a reason that it continually, there's always businesses popping up, and there's always new competition in the area. And the one thing that we've heard recurringly is that if you can simply get a level of customer service and a level of connection with your customers in these businesses that have for, God, I mean, however long these trades have been around, everybody has the same complaint. They're late. They didn't tell me. I don't know what I'm doing. The price is weird. Like, if you can just get clarity in certain parts of these businesses, people will come back over and over and over again because they just are tired of the games. And if you don't play games, you'll find a lot of success.
Mm-hmm. I think so too. So the really, like, the big takeaways here are: do your homework, make sure you look into these deeply. Don't take everything you see as face value. Ask good questions. But this is a great industry to get into, and we're excited to continue exploring it. And Ryan, where can they find you?
They can find me on LinkedIn at the moment, Ryan Santo on LinkedIn. Just shoot me a message with your follow request, and I'll happily talk with you. And Brody?
Well, you can find me on YouTube, Facebook, LinkedIn, TikTok, Instagram, pretty much any channel. I'm on I'm on pretty much everything. So find me, shoot me a message. Let me know if you have a question that you want us to answer on Deal Flow Live, this show, or if there's a particular type of business or industry you want us to cover. And if you're someone who's interested in investing into these types of businesses and buying businesses like this, shoot Ryan or I a quick request, and you might be able to come on the show. That's one announcement that we wanted to end off this one with. We are going to start accepting certain guests onto the show to help us with some of this deal analysis and just to look over things. So expect some cool guests coming in the next few weeks and months. And if you are interested in coming on as a guest to do some of this deal analysis, let us know and let us give us a request, and we'll see if you can get you on.
Yeah, we'd love to hear from people who are in the industries doing the private equity thing, investing in businesses and their experiences with certain stuff. So if you've been doing that or you have any experience with that, we'd love to chat with you, and shoot me a message, and I'll see if we can't get you on.
All right. And again, this has been Deal Flow Live. We do this Tuesday nights live around 6 p.m. Eastern Standard Time every week. Look to the next one, and we will see you next Tuesday.
Yes, we will.
Signing off.